Stocks turning lower after that weaker December retail sales number this morning. White House NEC Director Larry Kudlow was asked about it at a gaggle of press reporters. Take a listen to what he said.
Retail sales, that was, there's glitches in that number. Some of it because of the shutdown, some of it because, there's a message there. I'm very glad the Federal Reserve is putting their rates on hold. I think the president's warning on that was spot on. Now, hopefully, the Fed will step aside. We don't want to risk anything like that. Meanwhile, the overall economy is very strong.
Kudlow with the White House take on the numbers that the economy is still strong, and there were a lot of quirks that went into the December number. I mean, just listening to James Quincy talk about it, while he gave a cautious view on the global economy, he said that the U.S. is actually, they saw some weakness in December, but it's looking to pick up again early this year. David Solomon yesterday of Goldman Sachs said that there's very little recession risk. The U.S. economy is still chugging along. So we're not getting any kind of recession, super slowdown warning from companies yet.
No, and we got very strong export numbers from China, unexpectedly so, given the broader consensus that economy has been slowing.
Well, they've been stimulating like crazy. And also
9.1 versus a down 3.
Their currency, after falling 8% last year, has finally turned around. I mean, they've been doing a lot.
And we have had conference calls from 70% or so of the S&P 500 where there's not been, there's caution, they're lowering guidance a little bit, but there's nothing that suggests there was some kind of a hard stop, severe slowdown in the last months of last year. So I do think that the market is kind of taking this as a little bit of a cautious note, but stale data that we don't necessarily want to extrapolate too far.
Although the largest monthly drop in retail sales control groups in September 2001.
Oh, 2001,
yeah.
Right. And that's what feeds into GDP, of course. I mean, there were only
Citi
two
lowers
categories
its GDP
higher.
numbers, its fourth quarter real GDP growth forecast to 2.7 from 2.9%.
It was broad spending weakness. And, we were looking at some of the miscellaneous categories like musical instruments and bookstores. You were saying maybe a Toys R Us effect there, but it was across the board.
Yeah,
apparel, groceries.
I just wonder, just given its dominance in that category in December, what the role was. Year over year, retail sales up 2.3% December to December. Still very slow, given nominal growth is much stronger than that. So,
but even online spending off retail was weak, and usually that's a strong place.
In fact, we're looking at different slices in terms of the market reaction to the ETF Spotlight this morning. If you look at the different retail-oriented ETFs, so there you have XRT, which is the S&P 500 retail sector, about equal weighted, I think. So that is certainly down significantly, but we're not really seeing that much underperformance. One of the reasons is this sector is still well below its highs, much more than the overall market is. So, the XRT before today down 16% off its highs. The RTH, which is a slightly different market cap weighted retail ETF, down 10%. And iBuy, which is the Amplify online retail sales proxy, down 14% off its highs. S&P down only 7%. So right now, the market is kind of okay with this idea that we saw a slowdown. We're going to price a little bit more, but it's not as if the market was already pricing in a huge acceleration in retail activity. So maybe that's why this sector funds are not necessarily getting hit tremendously hard.
By the way, we didn't recap Lael Brainerd, Fed governor, with Steve Leisman, but I heard a lot of downside risks when she talked about it. I mean, she wasn't willing to say recession risks, but downside risks to the economy, balance sheet normalization should wrap up this year, she said. I'm not sure they ever articulated it that way.
Steve was trying to figure out how much they'll have left as a result on the balance sheet.
Exactly. I think a lot of the estimates were saying, well, if you take what they're saying about where it will ultimately settle at, it got you to this forecast that they probably were going to be done by this year, but I don't think it's ever been that specific by a Fed official saying that it would likely settle out by this year.
Meanwhile, Mike, the market itself has come back from the lows. Certainly the S&P down about 1/3% right now.
It's been the rule. I mean, there's a little bit of a bid in the market each day, and I think that, again, stale numbers, the first quarter shutdown is going to distort a lot of the economic data as well. So for now, I think because Treasury yields, they kind of reset lower but didn't keep crashing, which would have been a little bit more of a concern. So for now, it seems like this sort of resilient tone to the market is staying for the moment.
Also, the dollar weakened sharply on the back of that news, on this idea that the U.S. economy is slowing. It's actually now climbed a little bit back. Maybe there's a view that retail sales was a little bit of an anomaly and things aren't as bad as
coming
they
into
look.
today would have been risk number one. Well, if the dollar shoots higher, then the stock market will probably stop in its tracks. So that's not happened today.
Yeah, those correlations are a little thrown off.
Yeah.